Hi, this is Vijay, and you're watching Focus and Blur channel. Now, you might have read many articles these days regarding how the sky has fallen as far as Indian share market is concerned. So, I'm going to talk about two stocks today, namely Indigo and Titan. And I'm also going to explore whether there are any real feasible alternatives to Indian share market investment. So, let's start. Let's talk about Indigo then. Now, I have already talked about this stock in one of my previous videos called Creating a Watch List. Then, what's new? Now, Indigo is going to start flying to Europe. I'm talking about non Istanbul European destinations from summer 2025. And not only that, it has now clocked 65% Indian market share. Now, let that sink in. 65 is not a small number. Now, I do believe that it's going to leverage this domestic connectivity to increase its international market share. Now, you may know that India and China have agreed to resume air traffic. So it's possible that Indigo may start flying to China as well. And I do believe once they have more airplanes, they're going to start flying to America as well. If you look at the competition, then SpiceJet has posted a profit for the last quarter. Akasa Air has raised more money in February this year. But I do believe that these companies will take some time to ramp up. And in the meantime, Indigo can continue its growth. Now, if you look at the Indian government's investment in airports, you will see that more and more airports are getting created throughout the country. So that will help with revenues as well. So I do believe that Indigo is in pretty good position going forward. Um, at the end of the day, you have to remember it's an airline stock, so there is always a possibility of an accident. So, but other than that, I would say that it's pretty safe stock to own. Let's talk about the second stock, Titan. Now, many of us may view Titan as a watch company, but in reality, it's a jewelry company. 90% of its revenue comes from its jewelry brand called Tanishq, 90. Now we have to see why is Tanishq doing so well. Now I do believe there are mainly two reasons behind it. The first one is of course Tata's brand name. People are willing to spend so much money because they trust the brand. And the second one is the displacement of local jewelers. So we see that these big brands are opening more and more stores in different cities, and they are essentially squeezing out local jeweler shops. So let's say you are a consumer and you want to buy a gold ornament. Now, you may have some concerns. For example, let's say what happens if I want to, let's say, melt this gold ornament and make a new one 5 years from now? Will that local shop be there after 5 years? Now, the way these big brands are expanding, I may have some wariness about that. So I may say, why don't I just go to Tanishq then or another big brand? So at least I will be assured that store will be there 5 years from now. So I think that displacement is causing the revenue growth for Tanishq. That's what my feeling is. And it's not as if the gold buying habit of Indians is going to change soon. So I think this is a good segue to the next section, the alternatives to Indian share market. So let's start. Now, many people are saying that why don't we buy gold or Bitcoin instead of investing in share market? Now, I'm okay with buying gold as a hedge against inflation, but I don't want to put too much money in gold as such. Now, not many people know about this, but US government had banned owning gold during depression era. And if you owned gold, you had to sell it to US government at a fixed price. I'm not saying that the Indian government will do this in near or distant future. All I'm saying is this has happened. Just wanted to let you know this historical fact. Now, regarding Bitcoin, I'm a bit wary about it. because I believe government may not like a currency that it cannot control. So it may allow it to rise a bit, but if it grows too much, I do believe that the government will either start curtailing it or it may ban it altogether. So all I'm saying is just be patient. 15% drop from September last year is not that drastic. Also, it gives us an opportunity to buy good quality stocks. Um, just remember what Warren Buffett had said. Right? Let's say you own a stock and share market closes and it never opens for 5 years. Are you still okay with owning that stock? If you are okay, then that means you have bought a good quality stock. If you have bought good quality stock, you will be okay. So if you do like this video, then do share and subscribe. Again, I have to say that I'm not a government approved investment advisor. The stocks that I have mentioned in this video, I'm not suggesting that you should buy or sell those stocks. Uh, I do own Indigo and Titan, by the way, but I may buy or sell tomorrow. All I'm saying is just be patient. And all I wanted to do with this video is let you know my thought process. So that's all I had. Thank you.